Hi, this is Alessio, Rastani, leading trader. Hope you're well. So it is absolute chaos in the stock markets. And yes, guys, it is now official. The stock markets have entered a bear market as of yesterday. So let me explain to you what's going on and what could potentially happen next. Firstly, let me put some context here for you. About a month ago, back in November, so back towards the end of November, I mentioned to our members, so in the members videos, I said, look, a Dow theory sell signal has been issued. In fact, the Dow theory sell signal was issued in this area, right about here. And that's why I was looking for an opportunity to short this market. And essentially, that Dow theory sell signal was warning us that a bear market could potentially start quite soon. Now, let me tell you what happened here next. What's happened is that the S&P has broken key market structure. So firstly, you can see the S&P broke this 2581 level here, which is, why is that important? Because it broke market structure, okay? It did pretty much what Bitcoin did, which is that it broke its key support level. It broke the market structural levels, which of course, whenever that happens, is not good news. And as you can see here, since it broke 2581, it's managed to in fact drip lower and lower into now the 2469, and it actually closed below 2469. Now, why is that important? Because, take a look over here, the all-time high on the S&P, as you'll see here, was about 2940, okay? 2940 on the S&P here. And that means, as you probably saw from my video about 3 weeks ago, that we have entered the magic number we mentioned in that video, which is 2469. And I explained in another video the reasons as to why we could potentially enter a bear market. That was in this particular video you see here. Now, let's just do a quick recap. Why a 16% drop and not a 20% drop counts as a bear market? The mainstream media, most of the financial media channels, they think it's a 20% drop that counts as a bear market. But in fact, the best research done by Jack Shanap of the Dow Theory, he found a 16% drop actually is the correct measurement of what is a bear market. And by the way, Jack Shanap of the Dow Theory did some extensive research across all the bear markets in history. And all the research shows, when you look at all the bear markets in history, that the best measurement of a bear market is in fact a 16% drop in the stock markets, which is exactly what we've achieved now. And we've hit that magic number of 2469. And that's not all, by the way. Take a look at this as well. This is where it gets really interesting. The same research from Jack Shanap found that whenever there's a 16% drop in the markets, in the stock market, that also means this, that 80% of the time, the markets have declined or dropped by 24%. That means there's a high probability now that we could see a 24% drop in the markets. So what does that mean? Well, let's just do a quick calculation. If we do 2940, the all-time highs, minus 24%, okay, equals 2234. That means, guys, that by next year, in 2019, I think potentially in 2019, we could see the S&P drop to 2234. I mean, that is a significant drop in the stock markets, but it could get worse than that because his research, the Dow Theory research, found that the average loss for a bear market is about 34% over a year and a half. But even worse, his research found that 73% of the time, whenever there's a 16% drop in the markets, we could see also a recession, an economic recession as well. So all this stuff, all this information, the mainstream media has not caught on to yet. All right. So what I'm telling you right now is something only the mainstream media will tell you maybe about a few months from now. Because again, the mainstream media, they're waiting for the 20% drop in the market, not a 16% drop in the market. So remember, the correct measurement is 16%, not 20%, according to the Dow Theory's research. So again, what does that mean? Well, given the fact that we are here right now, and by the way, I went short on the stock markets right about here into these levels here. As you see here, here's a screenshot of my trading account, and currently about 4,700 pounds in profit. Now, what I'm waiting for is a bounce to add to my short position. I have to tell you, I'm a bit disappointed. I'm rather a bit disappointed the market did not have a bigger bounce a bit earlier so I could add to my short position, but it is what it is. But I think what's likely to happen now is this. The RSI is right now oversold. Okay, so we're in an oversold position on the RSI. And that means potentially in the next couple of weeks, by the end of December, we could see a counter trend move, a sort of sizable bounce. We could see a bounce or a counter trend rally. Now that might start from here or it might start a bit further lower, but bottom line is, I think what's likely to happen is we could see some kind of counter trend rally. It could potentially be a big bounce. And here's what's going to happen. I think that bounce is going to fail. And what's going to happen is that the media is going to portray potentially this bounce as, oh, everything's okay, everything's back to normal again, we're rallying back into a bull market. No, 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 no. That's not what's happening. So what is likely to happen is, when this bounce occurs, potentially in the next couple of weeks, by the end of December, two things are going to happen. Firstly, the folks out there who missed their opportunity to get out of the market a bit sooner, maybe at these levels, at 25.81 or higher, they're not going to get out of the market and sell their stocks. Okay, so that's the first thing that potentially could happen. You're going to see exit or exodus from the market by most investors. And secondly, what's going to happen potentially is that the professionals, the institutions, are going to aggressively short the market. They're going to aggressively bet against this market, as am I, by the way. So I'm going to use any bounce in the market, any bounce in the stock markets. Hopefully, it's going to be a big bounce. Okay, what I'm hoping for is a major bounce in the stock market that could come back to the major averages, and then I'm going to look for another shorting opportunity or setup at that point. So I'm looking for any rallies here to fail, and I'm looking for the stock market eventually to roll over and die and to head further lower. All right, guys, we are now in a bear market as per the research by the Dow theory. And therefore, if we are in a bear market, we could potentially see further lows in the stock market as we head towards 2019 as well. All right, guys, and just to mention, if you're not a member of Leading Trader, you can become one by going to this link you see here. That's leadingtrader.com/join. And look forward to seeing you guys in the next video update. Thanks very much indeed. Bye for now.